And the context of this panel really is the reality of companies throughout the value chain preparing for a future, or we're actually living already in a world where there's a lot of in-home devices that can connect to the internet, gaming consoles, TV sets, laptops, PCs, mobile phones, multimedia tablets. So basically, you're able to give consumers more control over content, how that helps media and communications companies, and how that can be able to be monetized in the future. So I'm Vivek Couto from MPA, and I'm the chair for this session. I just thought I'd start it off with a few slides from our latest research, just setting the scene. And as this slide shows, really the consumption of television in the Asia-Pacific region remains fairly strong. Total TV homes in the region reached 745 million last year. That's across the whole region. That's 82% household penetration. China and India are vast, contribute more than 75% to that total. We see penetration growing to almost 85% by 2015. That's about 850 million television homes. In some of the big emerging markets, TV set and TV household penetration continues to grow, including India, Indonesia, and Malaysia. In fact, the future growth of both basic pay television services and free-to-air television still has lots of legs in India, Malaysia, Indonesia, Vietnam, the Philippines, and Thailand. And all of these markets really are ones in which TV viewing through the TV set is actually increasing every day. And in places where over-the-top mobility or online is potentially a threat, and I think we're seeing that more and more in Australia, potentially Hong Kong, Singapore, Korea, Japan, maybe even Taiwan. Operators are innovating to really co-opt the future. And over this course of this year, we're seeing the launch of integrated broadband come pay TV media services through operators such as Foxtel in Australia and Astro in Malaysia. So within this TV pie, free-to-air terrestrial remains very important, especially in China and in Southeast Asia. But pay TV is becoming increasingly important, as you can see through the blue block, or I should say brownish block in this, and that's really represented by cable and satellite. And it's becoming important in Southeast Asia, but also in India, Greater China, Northeast Asia. And as this slide shows, cable and satellite really dominates pay TV distribution in most Asian markets. They represented more than 330 million homes in aggregate last year, cable and satellite. That's about 40% household penetration. IPTV, which for the purposes of this panel we've layered on top of this, is still a relatively new market, 7 years old since PCCW, I think, launched its services in Hong Kong. And it's growing. It reached 8.7 million homes in 2009, which we forecast to grow to about 30 million by 2015. Telecom operators, as we heard yesterday, are investing heavily in the rollout of next-generation fiber networks. And deploying IPTV on these networks becomes an incremental cost. And this is playing out to some effect in Greater China, Korea, and Japan. And the biggest risk really for these operators isn't necessarily the capex they spend on IPTV or FTTH. It's more content costs and content acquisition, which telcos in a lot of markets have little experience of. And also there's a tendency to commoditize. Today, we're seeing that IPTV has potential as a direct threat to cable operators in Greater China, Japan, Korea, and Singapore. And the most significant impact on its growth in this region has really come from PCCW and Now TV, whom we'll hear from later today, driven by the aggressive subscriber acquisition and the content investment it's made into this market. A similar trend may occur in some of the other regions. Making money from IPTV is also, a challenge. Access to content is a key barrier in many markets. It took 6 years for PCCW to start making money on a standalone basis from Now TV. Singtel's offering Mio TV isn't expected to break even until 2015 on a standalone basis. But as we will hear today, is IPTV can still make money and benefit other parts of the business, helping migrate declines in fixed line and broadband. And so as an overall business proposition, it still makes sense. This slide shows the growth of online video and mobile TV. The growth of online video in particular has been rapid. We estimate 380 million active online video users in Asia Pacific today. That's 11% penetration of the population. The vast majority coming from China, Korea, and Japan. And we expect penetration for online video to reach 20% by 2015. The Chinese internet industry's interest in online video has been really pivotal to a lot of our numbers, and it's been heating up considerably in response to very strong user trends and growing acceptance and demand by advertisers, especially we've seen in China in the last few months in the auto and FMCG industries. Moreover, there's new television advertising regulations in China which have come into effect this year that are spurring advertisers to look at cheaper alternatives, of which online video is a natural consideration. So in part of this mix, we've seen a lot of the larger cap Chinese companies see online video as very critical to their strategy, while some of the venture capitalists have been more aggressive investing into private players. But the key challenge here for online video, particularly in China, is that the competition for premium video content is increasing costs, increases licensing costs, and this results in less profits, lower margins, particularly as advertising-driven monetization of video content has yet to reach a significant scale. In China, Korea, and even Japan, while internet advertising is around 20% of total media advertising, online video share of internet advertising itself is typically less than 3%. So in Japan, we've had one online pure play video site backed by the free-to-air broadcasters and one of the telcos reaching break-even on an ad-based model, while two leading companies in China are approaching break-even. Broadly, the land grab we're seeing in China is largely related to the shift from traditional TV to online TV, which is occurring in the mainland. While TV remains important in that market, TV viewership is flattening or declining in certain territories, while online video usage is increasing. This slide also shows on mobile that we'll expect more than 68 million people in Asia Pacific could potentially watch broadcast mobile TV at the end of 2009, with a vast majority, really 95%, having access to free services. Many markets have resumed their plans after putting 3G and mobile TV rollouts on hold in 2009 because of macroeconomic problems. So 2010 is going to see more of a resurgence of some of those services. We see total penetration scaling up to 145 million people, with mobile TV-enabled handsets by the end of 2014. Only less than 10 million of these people will actually be paying subscribers. As I'm sure we'll hear from Paul, 3G remains the dominant distribution platform for mobile video. There's more than 210 million users of 3G-enabled handsets in Asia today, and that's basically the largest base for mobile TV. I think for actual broadcast mobile TV, the business models really remain unprofitable. It's hindered by slow regulatory progress. Advertising revenues generated by free services remain modest. There's some ad restrictions. There's some competitive dynamics that really on helping mobile TV models to generate profits at the moment. And subscription revenues from mobile broadcast TV reached less than 300 million last year. So as this slide shows, just very quickly, the growth in the broadband market is still very strong, and this is really providing something of a fertile market for online video. There's 200 million broadband users, as this slide shows, and a lot of it, in terms of the speeds available, the download speeds available, and sophistication of broadband networks is happening in North Asia, including Hong Kong, China, Korea, and Japan, and perhaps in the future, Australia and Singapore. And this is creating something of a fertile market for over-the-top and online video. And as this slide shows, though, in terms of revenues, free TV, cable, and satellite will continue to have the lion's share of video subscription revenues and advertising revenues. In 2009, we estimate the net pie for all video revenues in Asia Pacific was $65 billion. Lumping in together free TV, cable, and satellite, that had 95% share. IPTV, online video, and mobile TV had 5%. By 2015, we see that share growing to a little bit more than 10%. This, in other words, the revenue volume and the progression, will have an important impact on how content providers choose to distribute their content in the future. And it'll be interesting to hear what kind of opinions of Disney and to TVB in that regard. As a concluding slide, which doesn't look too visible from here, this slide really shows the leading integrated communications and media platforms in Asia Pacific. Operators that are able to share content across multiple platforms in the way PCCW has. PCC, of course, has led the way. More than 6 million revenue-generating units across all its services, and a 10% contribution from pay TV. Increasingly, we're seeing others do this, driven by M&A and strategic alliances, which really have the key trend that we're seeing is that telcos are increasingly acquiring cable and broadcast groups in North Asia or partnering with companies to gain access to content, TV distribution, and in certain cases, fixed broadband. So you're seeing this in Taiwan, as this slide shows, with Kbro and Taiwan Mobile, which is an alliance yet to be ratified by the regulator. In Japan, with the KDDI Jupiter Alliance. And in the near future, Malaysia, where you're going to see over the next year, Maxis and Astro combined together. So all of this really should be seen in the context of 5 key factors that we're looking at driving this value chain. Basically, the ability of platforms that own really optimal networks built for all future-proof business models. They're able to constantly innovate their product with portability across multiple devices, and that have attractive content assets with increasing scale. Thank you. I'll turn now to Mr. Paul Berriman of PCCW for his presentation. Thank you very much.